So, types of business entity. We have three types of business entities. Number one, we have sole tradership, right? So, sole tradership is actually word. It is owned and run by one individual, a single individual, and he do employs few employees, one or two individuals controlling their work. Sole trader is not separate from the business and it's personally liable for its debts, right? For example, here's a guy, right? He started his own business. He have a few number of employees with him, right? Uh, it will have simple transactions, not so much complex. In case in future, if his business go wound up, is solely and personally liable for all of its debts, uh, liable for all the debts. Indeed, he has to sell his personal assets as well, right? So, what are the advantages of sole trader? There is limited paperwork, right? Limited paperwork, that means limited paperwork and therefore cost in establishing this type of structure. Owner has complete control over the business. Over the business, owner is entitled to profits and ownership of profits. It's flexible and less reporting obligations with other business structures, no requirement to make financial accounts publicly available, and no audit is required. Right. So these are the advantages. What are the disadvantages? Or as I told you earlier, owner is personally liable for all of his debts, right? No matter if he has to sell his own personal assets to settle those debts. It meant they, as he's alone, a few number of employees, so he or she may lead to long working hours. Large sum of capital may not be available for sole traders because capital providers may be unwilling or hesitate to provide him so much finance. Right, and then we have another type of business, that is partnership. There are these are the arrangements between individuals to carry on business in common with view to profit. A partnership, however, involves obligations to others, so partnership is usually governed by a partnership agreement. Partners will be fully liable for debts and liabilities, for example, if partnership is sued. Right. So, what, for example, um, here's a Mr. A, here's the Mr. B. Both of them decided to be a partners, right? Now they will carry on their business. Uh, now again, this is partnership, right? This is partnership. For partnership, it is necessary that there are human being, or you can say a human being, an individual should be doing business, right? There will be no partnership if, for example, Mr. A and Samsung decided to be partners. See, Samsung is a company, Mr. A is a human, so that will not be a partnership. For being a partner, they should, it is necessary that is among the individuals, among the human beings, and there should be at least two partners, maximum it can be 20, right? So what are the advantages? Again, there will be less reporting obligations. Additional capital can be raised because of the more people involved in the business. Divisions of roles and responsibilities, for example, can be shared. For example, Mr. A decided to look at the finance, whereas the Mr. B decided to look over the management responsibilities. They can share the share of risk and losses, and then we have disadvantages. Disadvantages are partners are jointly liable for all debts. There will be slower decision making, right? Costs associated with partnership agreements. Uh, there will be cost to legal costs, etc. Issues of continuing business in the event of death or illness, right? If, for example, if one of the partner dies, and if there is no clause in the contract, then partnership or the business will be dissolved. Then we have limited liability company. So limited liability status means that the business debts and the personal debts of the business owners are legally separate. The shareholders cannot sue for the debts of the business unless they have given some personal guarantee. This is called limited liability, right? So, for example, in this case, Mr. A decided to make his limited liability company, so it will be like limited liability company limited, right? He will share, he will issue his shares for the company. There will be shareholders involved in it. Now, the investor, for example, has the share 1,000 shares, right? And in future, companies go winds up, so wind up. So now, what will happen? It will happen that he will lose his investment only. He will lose his investment only. No one can sue Mr. A or shareholder to pay all the debts of the company by selling his personal assets. He's only responsible up to his investment. That's it, right? And then we have so what are the advantages? Limited liability makes investment less risky. Limited liability makes raising investment easier. It has separate legal entity from its own owners. It is easy to transfer shares from one owner to another. Tax advantages to being a separate entity. And what are the disadvantages? Limited liability company has to publish financial accounts publicly, right? Limited liability company has to comply with legal and accounting requirements. They has to comply with IAS. They has to comply with IFRSs, right? The shares issue was regulated by law. So another legal cost. The financial statements of companies has to be audited. Another cost. See, it's costly. So far, so good. I hope you got it till here. See you in the next session.